All right, guys, we are back with another trade recap. Now, this is a pocket trade, and this was inside our range boundary today. So it is a little more high risk, but it did play out, and it is what you're looking for in a pocket trade. So to start out, we had a large, strong candle that broke through the 8 and 21, had a good, strong close, and quickly after that, we came back and retested the 21. And that would be your entry there at 50.95. And a stop is always a good strong close below the 21. And now for a profit target, this is where your risk or what you're comfortable with comes into play. So right here is this is where we started wicking and found some resistance. So right there, if that was your profit target, you had a 2-point stop for an 8-point profit target. And that's great risk to reward. But up here at 5108 is our main, or a lot more defined resistance, I should say. And all the way up there
Can you
would have been,
put your cursor on that and show that?
yeah, I'm gonna drag this box up there. That would have been 13 points up here at 5108. And this is, I think, where Travis is mentioning that's why it's our resistance. We rejected it 3 times. But on the flip side of that is if your risk tolerance isn't that high, and you're wanting to trade a little safer, your profit target can be all the way back down here at the top of this bar where it close to, and you still would have had a 4-point profit with a 2-point stop. That's still risk to reward, a good trade. Is there anything you'd like to add to that, Travis?
No, I think I like the trade because, well, like you said, the range presents an inherent higher level of risk. You have to know that when you're in a range. It could have failed out the bottom very easily. The reason I like this trade, especially as we get into, let's say, about that third candle after the big bullish candle that closes above the 21, you can clearly see that this thing is tucked in a pocket. It's compressing energy. It's not closing below the 21 moving average. It's not closing above the 200 period moving average, which you have on your chart. There is, I think, a blue line. But you can clearly see it's compressing into a pocket. And when that happens, it eventually breaks out. And what we see on these pocket trades, when you have a strong move that closes back on one side of the 21 period moving average, usually the breakout is in the same direction, which happened here. So yeah, we just want to show this because visually, it's a textbook pocket trade. And then, like you said, you've got multiple targets here, and the most conservative one still gave you 3 to 4 points of profit, which was great.
Yeah, exactly. And that's one of the things we're kind of hitting on after today's trading is risk tolerance, and how in trades for profit taking and for setting a stop loss, everyone's different and it depends on how experienced you are, just a few different things. But there's not necessarily a right and a wrong. I mean, I would consider it wrong if you set it all the way down here, but there's a few different levels of support in here. It doesn't have to be a close right below the 21. That's just my rules for a pocket trade.
Yep. Sounds good.
Yep.